Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into company filings, and today we're going to decode Jupiter Neurosciences, Incorporated their latest -1 filing. Get ready, because this one's a wild ride with some serious financial gymnastics and ambitious plans. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down more filings and chat about market news. So, Jupiter Neurosciences Inc., or JNS as we'll call them, is trying to make a splash in the market. They're looking to sell up to 10 million shares of their common stock. Now, this isn't a typical offering where the company itself is raising money directly from selling these shares. Instead, these shares are being offered by a specific entity called Yarthasuken Limited, which they refer to as Yorkville, or the selling stockholder. This means Yorkville is the one selling shares they either already have or expect to receive from Jupiter Neurosciences, Incorporated. Basically, Jupiter Neurosciences, Incorporated is letting Yorkville resell a lot of their stock. This often happens when a company has made arrangements with an investment firm to potentially sell shares over time, and this filing is to make sure those sales are legal and transparent. Let's cut to the chase and look at the business itself. Jupiter Neurosciences Incorporated is a pharmaceutical company focused on developing treatments for central nervous system or CNS disorders and rare diseases. They're also dipping their toes into the longevity market with a product line called Nugivia. Their main scientific weapon is something called Jotrol, a special form of resveratrol, which they say is much better absorbed by the body. For their prescription drugs, they're looking at Parkinson's disease, and for their Nugivia line, they're aiming at things like mental clarity and skin health. Now, for any pharmaceutical company, the big question is always about their drug pipeline. Their lead candidate, Jotrol, is heading into phase 2 trials for Parkinson's disease, which is expected to start late this year, 2025. With results a year later, they're also eyeing other brain-related conditions like Alzheimer's disease. The science behind Jotrol is that it is supposed to deliver a much higher concentration of resveratrol without the nasty stomach side effects that usually come with higher doses. They've even got some interesting interest brewing in Asia for this product. Okay, let's talk about this big agreement called the Standby Equity Purchase Agreement, or SEPA. The company has the right to sell up to $20 million worth of its common stock to Yorkville. This is a crucial detail because it means the company can decide whenever it needs cash to sell shares to Yorkville. Yorkville is essentially agreeing to buy these shares if the company wants to sell them. Now, here's where it gets a bit complex. The price Yorkville pays for these shares isn't fixed. It is often tied to the market price, specifically 97% of the lowest daily volume weighted average price, or VWAP. Over a few trading days, this means the company might sell shares at a discount to the current market price, especially if the market is volatile. And talking about risks, there are plenty. They've got a whole section dedicated to them. And it is quite extensive. They point out they're early in their development, haven't made any product sales yet, and have seen significant losses. They also highlight the intense competition they face, both in the supplement market and in the pharmaceutical world. The success of Jotrol is absolutely critical, and if it fails, their business could be in serious trouble. Let's zero in on the financials. For the 9 months ending the 30th of September 2025, they reported a net loss of over $6 million, and for the whole year 2024, that loss was close to $2.5 million. They have zero revenue from product sales. This is a stark reminder that they are still very much in the development phase. Looking at their cash flow from operating activities for the 9 months ending the 30th of September 2025, it shows they used over $3 million. This means their day-to-day business operations are consuming cash, which is typical for a company at this stage, but it underscores their need for funding. Now, for the balance sheet, as of the 31st of December 2024, Jupiter Neurosciences Incorporated had about $3.7 million in cash. That is a significant jump from just $28,000 at the end of 2023, largely thanks to their initial public offering, or IPO, which brought in over $9 million in net proceeds. However, their liabilities are still quite substantial. Their accounts payable and accrued expenses were around $400,000 at the end of 2024, which is a decrease from the previous year, but their accrued compensation was over $1.4 million. This indicates they owe a considerable amount for salaries and benefits that haven't been paid out yet. And look at this. Their additional paid-in capital is over $30 million. This shows how much money investors have put into the company over time, mostly through stock sales, reflecting the significant capital they've had to raise to fund their operations. Despite all that, it is important to check their total stockholders' equity, which is just over $4 million. However, if you look closely, their accumulated deficit is a whopping $26 million. This means that over the years, their losses have significantly outweighed their gains to a point where they've wiped out most of their paid-in capital. Okay, let's look at the income statement for the years 2024 and 2023. They had zero revenue in both years, which we expected. Their operating expenses were roughly $3 million in 2024 and almost $4 million in 2023. The difference in their net loss between 2024 and 2023 is quite remarkable, about $2.5 million lost in 2024 compared to nearly $5 million in 2023. This is partly due to a gain on the extinguishment of debt in 2024, which helped offset some of their operating losses after they restructured or paid off some of their debts. Looking at the statement of changes in stockholders' equity, it vividly shows the impact of stock options and restricted stock units granted to employees and advisors. You can see how these non-cash compensation expenses are accounted for, significantly impacting the equity section. The cash flow statement tells a big part of the funding story. In 2024, they had a massive inflow of over $7 million from financing activities, largely due to their IPO. This contrasts sharply with 2023, where they only raised about $450,000 from financing. Without that IPO money, the picture for 2024 would look very different, with cash used in operations being higher than the cash generated. It is interesting that they currently list only one reportable operating segment, Jotrol Drug Development, although they are starting to talk about premium nutritional supplements under the Nugavia brand. Management hasn't separated these yet for financial reporting. This suggests their primary focus and investment remain firmly in drug development. Now let's talk about who is steering the ship. The executive compensation table shows some deferred salaries in 2023, with executives agreeing to lower pay to help conserve cash, especially before their IPO. In 2024, salaries started to pick up again. They also granted significant stock options and restricted stock units, which is a common way to incentivize leadership in early-stage companies. For instance, Krista Rosen, the chairman and CEO, and Marshall Hayward, the chief scientific officer, both received substantial stock awards. This section usually has some interesting tidbits, and here we see the CEO, Krista Rosen, has extended loans to the company. While these loans were repaid by October 2025, it shows the personal financial commitment from leadership. We also see transactions with Titan Advisory Services, a company partly owned by the CFO, Salim Al-Masri, showing that related parties are involved in providing services that are essential for the company's operations. Looking at who owns the company, it is clear that the insiders and early investors hold a significant chunk. As of November 2025, Krista Rosen and Marshall Hayward, along with other management, collectively own over 50% of the company. This concentration of ownership means they have a lot of say in key company decisions. There are also a couple of other significant shareholders like Clays Wallerstedt and Shawn Brothers, who own around 9.5% and nearly 6% respectively. This section explains how Yorkville might sell those 10 million shares. They can sell them through brokers in direct sales or even on the market. It essentially says Yorkville has a lot of flexibility on how and when they unload these shares, which could mean a lot of stock hitting the market over time. They also mention that Yorkville is considered an underwriter, meaning they're essentially helping to distribute the shares. For our non-US viewers, this section lays out the tax implications of owning J&S stock. It is pretty standard stuff about withholding taxes on dividends and capital gains, but it is always worth a read if you are investing from outside the US to understand any potential tax liabilities. And finally, the exhibit index. This is essentially a table of contents for all the important legal documents that back up this filing. It includes details about their incorporation, bylaws, various agreements like the SEPA, employment agreements, and financial audit reports. It is a treasure trove for anyone wanting to do an even deeper dive. Now, let's wrap up with our take on Jupiter Neurosciences Incorporated. On the positive side, they have a scientifically plausible platform with Jotrol and two distinct business areas, pharma and supplements, aiming to leverage this technology. The IPO provided a much-needed cash infusion, and their leadership has deep industry experience. However, the risks are significant. The company is still pre-revenue, heavily reliant on the success of a single drug candidate, Jotrol, and faces a very long and uncertain road to regulatory approval and commercialization. The substantial number of shares that can be issued under the SEPA also poses a significant dilution risk to existing shareholders. Their ability to continue as a going concern, as noted by their auditors, is a major red flag, meaning their future heavily depends on their ability to raise more capital, which is never guaranteed. The journey ahead is fraught with challenges, and investors should be prepared for significant volatility and the possibility of the company not achieving its ambitious goals. It is a high-risk, high-reward scenario typical of many biotech companies, but the financial numbers here paint a picture of a company still very much in its infancy, relying on future successes to justify its current valuation. Alright, that is our breakdown of Jupiter Neurosciences Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.